Hello traders, my name is Felipe. I'm going to be posting a real quick Elliot Waves market analysis. I hope you enjoy this. I'm going to try to make it short as possible, very brief, and let's get to the point. I'm going to leave you with my social media, Instagram. You guys can follow my work here at Forex Scalp King. Um, I am a scalping expert. I like price action. I've got 4 years trading experience. I'm going to leave you here with the link of the broker I've been trading with for a while now. And as you can see, I've got pretty much a lot of work I've been trying to keep up with. Anyway, you guys can also check me out in this is my personal site, felipersanchez. Just if you want to give me a personal follow-up as well. Let's dive into the charts, and we're going to talk about Elliott Waves theory. Now, this is a type of analysis very effective. It is one of the most effective techniques there is because, as you guys know, and if you're a bit new to this, market behavior is a very, very important thing to understand, and most of all to project. Okay, there's one thing about market behavior. I mean, you can know about it, you can understand, but if you can't project the price, don't know if you don't have an idea of maybe when to try to get in or why, then there's no work behind and no reason why you would even need to know about market behavior. Okay, so in other words, knowing about market behavior is like learning how to walk before running. And let's try to do this in this video. I'm going to try to explain it in a very simple way. Most of you probably have heard or read or understand Elliott wave theories, but basically it all comes down to market behavior itself. There's a lot of also psychology involved, and we're going to talk about it if we got time. But let's make this real quick analysis before getting too far. Okay, this is the New Zealand dollar, US dollar daily chart. I'm using the Owanda data, and it really doesn't matter. It's just to get this chart done with. Now, what we can see in a general picture, of course, it's a clear uptrend momentum. Okay, this is one of the first things you guys always got to check out is what's the momentum, what's your general bias, it's a bullish, is it bearish, is there a major trend line that's been broken, is there a major support that's been retested, and so on. Now, clearly we can see, and obviously, market changing direction over here because something happened down here that made the market change direction. If you guys can see, I am not a fan of any indicator whatsoever. I don't use EMAs, I don't use RSI, I don't use stochastic calculators, I don't use any of that because I'm not going to say why now, but that we could talk about it in another video. So pretty much here is where the market made a decision of changing direction, and I can show you something that gave us clues. Okay, so what I like to analyze is candles. I have analyzed candles a lot. They tell you sometimes they tell you so much, and we're blinded. So initially, what we're seeing here is this bullish engulfing candle. Okay, we could have tried to do something over here, but it wouldn't have been a smart play. There's no confirmations yet. I'm going to show you a support that's right over here. Yes, price did fall and broke it, and it could have been considered as a pullback and then continuation. Look at this candle is pretty much bigger than this one, almost an engulfing candle. Now remember, engulfing candles have to cover even wicks, so this doesn't really count as if you guys focus here on the right. This doesn't count as much as it would have been an actual engulfing bearish candle where it would have had to cover even these wicks over here. So that alone isn't just a confirmation, and it is not telling me anything yet. What does tell me though is this next big candle. That's an awesome bullish engulfing candle, and it is showing me rejection. It's showing me a change in direction. It's showing me momentum, strength, etc. And what happens is it closes within the support area that it broke before. In other words, it's trying to get back into the range where the market was. And that's a very, very big and important clue. Notice what happens then. Market just creates a sort of a ranging candle. So now the price is between 65282 around and 650000, and boom, we have a breakout of that resistance area and back into the range up over here. So that is a confirmation movement. That is a smarter trade. That is a more safe trade. Whereas if you wanted to get the very bottom of it, you would have had a hard time for sure. It's very hard to time the market. It's actually one of the, I consider it impossible. You just can't time the market. You can't project it, but not timing. Anyway, what happens next is market keeps pushing. It has to make a recovery movement. There it is. A pullback to that previous support resistance, broken resistance level, which is now a support. And it's a lovely behavior up until here. Now this is another clue, a longer term clue that we can use to our advantage. Now this got tricky. Obviously, a lot of people probably bought. A lot of people here got stopped out over here. But here's what happens. Notice this candle. Where is this candle appearing? What type of candle is it? First of all, which is a hammer candle, bullish hammer. So it's theoretically, essentially a candle that means a change in direction or a continuation in direction going up. But what I want you to focus on is the fact that it appears within that support area that the market had broken before. That's a clue number one. Okay, so I'm gonna write this over here so we don't forget. So big clues, big small clues, because these are pretty much, sometimes they're so small you can't even notice them, but they're so big. Okay, big tiny clues. So number one, we've got a hammer candle, and this hammer candle appears within a major support. Okay, that's a better word for it, a major support. I mean, it could have been a support that got broken, but this is a major support. Okay, so number two, I'm gonna write number two in a second. Let's leave this aside over here. But what is the clue number two regarding this candle within this specific area? The fact that it fails to break this lower low over here. And now what we've got, if you guys draw a trend line, just connecting these wicks, you've got the beginning of what could be an uptrend channel. Okay, so this is also something I like to do a lot, and it's always draw trend lines. Anyhow, somehow, it doesn't matter. It's okay to draw a trend line and then have that line have it corrected. It's okay. It's actually necessary. So look at this trend line. Look how it's starting to come out. Okay, so maybe in another video we'll discuss the slopes of trend lines. But right now it's just the fact that we've got a lower here, but we've got a higher low. Okay, that's clue number two. So clue number two is we've got a higher low. Hold on. Higher low, and this higher low appears, or I guess you could say it occurs. It occurs at a key major support area, and not only that, it occurs. What makes that higher low is the actual hammer candle itself. So we could say that this hammer candle, its wick, creates its wick. Creates the higher low. Okay. Now there's an interesting market behavior here, and that is what I've learned and I like to understand as smart money and premium pricing. Okay, so it turns out institutional trading, they're going to want to drive, if they were to buy this, they'd need to buy it at the most cheapest price possible. In other words, they'd have to drive price down first to then buy cheap and get the best price or premium price. Okay, we can discuss that uh, in future occasions. But the clue for that is this long wick. Okay, so the wick of the hammer candle is going to mean that institutional premium price grabbing. They're fishing for the lowest price possible, and they managed to bring down the market, bring down price almost to that exact support over here, but they failed to do so. And that the failure of this, of breaking this support, this lower low, is you could say clue number two. It's within clue number two. So the failure of failure to break that lower low, or lowest low, if you want to call it better, lowest low. Okay, so I've read about this, and I've learned with a term called double failure. So pretty much it says that the market, the bear, in this case, the bear market, the bears are going to want to drive price down and keep breaking lower lows, but eventually they're going to fail. And when they fail, they can try a couple times, normally two times. So this is one time failure when they got lower over here, they got lowest low, and then they tried once and failed to break such lowest low. So I don't want to get stuck in this, but it's very fun to actually be able to understand this and see it. Okay, what happens next is this awesome engulfing candle. Even though it's not covering all of these, it is appearing from that support area after that bullish hammer candle. And even in between those candles, it's another small inverted hammer candle that is respecting the support area. So in other words, also what you guys can do, I'm going to ask you something. I'm going to ask you here, do you think that price would eventually want to break that support after seeing so many candles close within that support area? Or do you see maybe an intention of the market wanting to break it? So the answer is that here there is no strength or enough bears to continue downside. Okay, we would have seen something like that if maybe this next red candle would have covered this wick. So if we're over here, we see that hammer candle, we say okay, one time failure, we got the long rejection wick. Now what's this gonna do? If that candle would have closed down over here, then we wouldn't have thought of buying, I'm sorry, and we would have waited more, because probably that would have been a second time failure and price would have probably been about a double bottom. Okay, but that didn't happen. The candle of that next, the body of that next candle closed right on the support area, and then this awesome bullish kind of trying to save the day candle came out, and then look what happens next. That's big continuation, rebound off of that support. So look, as a matter of fact, where the second failure came in, you got this one-time failure down here with the premium price wick. Then you got this kind of push to the upside, and that small body of that candle is the second failure, and that's even a third failure. So we got one time, two-time failure, boom, instant rejection, instant breakout, instant change in momentum, and that's where a lot of the bears got trapped, and then price just exploded. Okay, so that what we just talked about within these first couple of minutes is pure market behavior, and there's a lot of psychology behind, because a lot of us will get stuck and will get trapped. So in other words, you've probably learned that once price breaks support and it goes back up to retest, that's just a pullback, and therefore there must be a continuation movement, and that's fine. However, what you probably haven't paid attention to is the combination of different types of analysis. Remember, there's technical analysis, fundamental analysis, chart analysis, there's candles analysis alone. And when you combine all these ideas, you're going to find big, tiny clues. You're going to find market behavior, and your trading is going to change. This is just one type of behavior that could have given us these clues to look for buys. Another way of seeing this is whenever you've got big candles, they obviously mean decision candles, I call them, because they're clearly continuing on a direction. And eventually, what you have is they change sizes. They get smaller. So look at this big candle. It's got this smaller candle. Then you got another small candle, and then you got another. Even though it's very tiny, it changes color. In this case, it's now green. And that generally means rejection candle. Even though it's not engulfing, it just means rejection. Okay, and once you see that on a key support or a key resistance area, that's the clue. Okay, that is the big clue. So for example, over here, you got a big candle, then you got a smaller candle, then you got a change in color, and then you got wicks. Then you got this small hammer candle, and then boom, change in direction. Once again, big candle, smaller candle, smaller candle. This one got a little bigger because it made a double bottom over here. Then you got this trying to change direction type of movement, and then you got a failure of a breakout of this support, and this was a fake out. You see, it kind of sneaked in, and then it went back up into the range. So these wicks over here was the example of that rejection. Okay, so anyway, let's go back to now. I had to start there because you had to understand why the market changed direction. Okay, it's easy for somebody to just say, okay, this is the market right here, it's moving up. But okay, why did it start moving up? Like, how would I know? I want to catch the very bottom of it, right? So that's one way. I hope it's clear. And if it's not, I'm going to do this every week so you guys can start practicing. Okay, we're going to talk about that in the end. So stay with me now. We got the change in direction, big momentum, and now this is where it gets fun. This is where it gets awesome. Check this out right here. We got this big resistance area, and remember, we haven't seen this. We just saw this big candle right over here. Now here we see this rejection candle in a clear resistance area. Does that mean we're gonna come back down over here? It could mean that. You never know. But you just gotta wait. Normally I wouldn't take any trades after these big movements. I mean, it's already gone. Okay, the awesome trade would have been over here when the market made that pullback after seeing this hammer candle. But if you would have missed this, if you were just, you got home, you got whatever, you're online and you open up your trading platforms and now you're seeing this exactly, well, you got to evaluate. You got to wait for this range to break. Okay, it is easier to say sell resistance, buy support. Market could range like this horizontally. Check your fundamentals as well. You never know what happened to this candle. This is just one big bullish day, so always don't forget to check your fundamentals. But going back to the technical analysis and chart analysis, we see a breakout of that resistance, and look at that wick of that next bullish candle. It did an awesome retest, and that would have been an awesome buy to continue that momentum. You would have held those trades prior, entered there over again, and that's your big continuation range fill right here. That's another setup we're going to talk about in the future. That range, it's called breakout, retest, range filled setup, and it's great. Now, all right, where does the Elliot analysis start and come into play? You guys know of Elliot analysis and Elliot waves, that there are there are major waves. The market is going to behave with 5 different types of waves. It's actually 2 types of waves, and they're divided within subwaves. Okay, so bear with me. We're gonna have impulsive waves, and we're gonna have corrective waves. Impulsive waves are I'm not gonna teach you analysis right now. I'm not gonna teach you the Elliot waves theory. You guys know this, and if you don't, please allow me to post a video later on, or just real quick Google it. It's you guys can understand in a simple picture. But remember, you got impulsive waves and you got corrective waves. Impulsive waves have 5 subwaves, so we have to start counting. Whenever we see a higher low, that has to be 2. So we got one wave right here. There's got this little 1. We got wave 2, and then we got big wave 3 over there. So wave 3, you guys don't even see it. It's up over here. Now you guys can see it. And remember, impulsive waves have 5 subwaves. Corrective waves have 3 subwaves. So this impulsive wave 1 is got 1, 2, 3, 4, 5. Okay, I'm gonna do that again. Follow my cursor. We got 1 over here to that wick, 2 with this candle, 3 over here, 4 with this small candle, rejection over here, 5 over here. Okay, 1, 2, 3, 4, 5, and then you got A, B, C. Remember, your second wave is a corrective wave, and it's built up and it's made of 3 subwaves denominated A, B, C. Okay, so I don't illustrate them in here because they're gonna be too tight, but you guys can see it. Okay, so once again, 1 to this little wick over here. I'm gonna zoom in. Oh, thank you, Felipe. Yes, thank you. 1, 2, 3, 4, 5. That's 1. Impulsive wave 1 is made out of 5 subwaves. A corrective wave 2 made of 3 waves. A, B, C down over here. A, B, C could be any way. It could be horizontal. It could be very strong downward. It could be upward. It's a structure. It's a corrective structure. This is where you see flags. This is where you see triangles. So look at this, for example. There's an awesome flag over here. Oops, sorry. Changing the chart's going to change for. Okay. So look at this awesome flag over here. Okay, that is corrective wave. Okay, you got A, B, C, and then you've got the beginning of the second impulsive wave, which is wave 3. Again, 1, 2, 3, 4, 5. Okay, remember 1, 2, 3, 4, 5, 1, A, B, C, 2, 1, 2, 3, 4, 5, 3, A, B, C, 4. Notice how perfect that is. Notice how effective that is. If you guys follow this theory, you got to be careful though. There are some pairs that move better based upon this theory, and there are pairs that just move, they're more aggressive. Okay, we're checking out again New Zealand dollar, US dollars daily chart. Second impulsive wave, big wave, number 3, 5 subwaves, 1, 2, 3, 4, 5. That's 3. A, B, C, that's your second corrective wave, wave number 4. And then you have to have, where's 5? Right up over here. 1, 2, 3, 4, 5. Okay, once again, from here, 1, 2 to this wick, 3 to this small part of the candle, 3, 4, 5. So in this case, we'd have to zoom in. We'd have to go to lower time frames to appreciate better what we've seen here. But it's inside of this. It's inside of these bigger candles. Okay, bear with me now. This is one big wave. This is one of the major waves. Okay, so notice how as we expand and as we see the bigger picture, each 5 subwaves makes a one correct impulsive wave. So what is this one wave? Is going to be one of 5 subwaves of this big one wave. Okay, so that's where we got this I as E1. Okay, so once again, 1, 2, 3, 4, 5, 1, just like we got down here. Then again, ABC, that's big ABC, big corrective wave number 2, and now we're pushing toward big wave, impulsive wave number 3, impulsive wave 3. Okay, what have we gotten so far? We've got a 1, 2, 3 of that bigger third wave. What are we waiting for? The corrective wave of this big wave number 3. So we've got 1, 2, 3. We're waiting for that 4 to give us that buying opportunity to then push up for wave number 5, which has to be made up of another 5 subwaves. Okay, so that is the Elliot waves analysis for this pair. How are we going to act? What are we waiting for? What are we going to do? What are we going to wait, etc.? Just how we've seen these types of behaviors over here, we're going to wait for them right here as well. There will be specific market behavior patterns or say chart patterns that are going to help me. So for example, what can help me say that this price is actually the creation and the beginning of this wave 4? The fact that this is a bearish engulfing candle. That's number 1. Number 2 is, where did that bearish engulfing candle appear in this key resistance area? So notice how we have to combine support and resistance, candle analysis, wave theory analysis, etc. And notice how this resistance over here made a double top over here. Interesting bearish engulfing candle right on a resistance area. That could mean a try of a pullback, a correction, surge in liquidity and demand, whatever you want to call it. And eventually what could happen is the breakout of this high, because if you think about it also, look how fast and how strong price reached this resistance, but it didn't range in here. It didn't consolidate. Okay, when the market doesn't consolidate, it normally means it still has momentum. Okay, so in other words, if we would have seen the market here, say, build a couple candles here, a couple wicks up here, then a third candle with a big wick on top, and then a couple of candles here, indecision candles, say dodgies or something, then that could mean just price is going to be here for a while and then drop back down over here to this important support area that we got illustrated over here. But that's not the case. Notice that what we got is we got big, strong, and aggressive moves. So that only means a bull market. Bulls are in control, and you cannot trade against the trend. Okay, trend is your friend. Remember that always, always, always. Okay, what is clue number 2 regarding the strength of this market? Well, have you by any chance noticed something very similar to what we seen down at the bottom when the market flipped? You guys remember what we talked about over here, that one-time failure situation? Notice that over here. So notice how the market falls over here, then it goes up over there, and then bears are saying, "Up, this is a pullback. Let's try again," and they failed, and boom, this is where the market rebounds. So that is another big clue, big tiny clue that the market just wants to continue going up. Okay, that right here is another big clue, and this itself is a higher low. So we got lowest low, higher low with this wick, and that makes up this big low. And then we got a higher low with this wick here and a higher low of this low regarding this wick. Okay, so notice how we have to understand this to make better decisions, not to get stuck and not to get excited, not to get trapped in these big psychological momentum movements. Okay, that's hard for me. I'm not saying I'm perfect, and I'm not, and it's very hard, but this is why we are working toward building up a team. If you guys want to join, by the way, I'm going to leave somehow, somewhere, whether that's up over here in this corner, a link, or you guys can comment on this video later on. Give it a thumbs up, obviously, and subscribe to my channel. Follow me for more. Continuing this analysis, what can we expect for next week? Market is closed right now. It is Friday night. I am not out. I am working Friday. Okay, grind includes Friday. What I'm going to be looking at is lower time frames. Let's go back to, say, the third 4-hour candle, 4-hour chart, and this is great. I love this right here. This is where we're gonna see and wait what happens, and it pretty much already did, but check this out right here. Okay, so it's interesting that the market managed to close exactly on that support level, but the fact that it did it with 2 consecutive pretty big bearish candles, it tells me that it wants to fall more than it wants to bounce back up. Okay, so I'm going to show you what I mean. We got key resistance area. We got wicks starting all over here. Wick, 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 wick. We've got, remember that first time failure thing, we got this try to break resistance, and then one time failure, and then boom, bearish engulfing candle, and then this bearish continuation candle, wick fail candle. These 2 candles are save the day for bears, awesome pullback for bulls, and they're going to be waiting right over here. This is a great buying zone right now. So this is what I'm waiting for. This is what I wrote it over here at the right. I got this somewhere over here. I'll show you guys when we zoom out. But we got a buying zone, support, swing support. Okay, so what are we going to be expecting for the market opening? Let's wait for the setup. Let's wait and trap those bears. Let's trap those bears, because it's going to happen. They're going to think, oh, this is a big double top. Oh, I'm gonna sell this, and I want to clear the charts a little bit to show you what I mean. And I'm going to do this maybe on another chart, so I don't have to redesign everything. This is another way of analyzing it. I'm going to show you. Let's open up another chart. Give me just a few seconds. By the way, I recommend you guys do this. Open up like 3 different charts from 3 different brokers, so that you can draw and make your analysis in different time frames, and you don't have to always be switching and changing it up. Okay, here it is. It's also, we're starting from 0. So what do we got? We got this awesome trend line. Okay, I'm going to put this over here, and right about here, we've got this trend line. We've got this channel, awesome channel right here. Okay, and notice how we've got this interesting previous resistance broken, now future support area, and that represents our battlefield. I like to call it battlefield between the bulls and the bears. Okay, so this is our battlefield, and what we're going to be expecting is I want to show you something else. I'm going to draw an interesting enough support right over here. Okay, because this is where a lot of bears are going to get trapped, possibly. Okay, bear with me here now. What we can see, what we could expect is, I'm going to lock up this instrument for you so I can draw this interestingly. And what we could expect is price to start heading down toward this area. But before the buyers manage to push price and continue with that momentum, there's going to be some trapping going on. There just has to be. This is how there are winners in this, because there has to be, unfortunately, some losers before. So how is this going to happen? It's going to be, well, hopefully it happens this way, and this is most likely. Here we've got that support that we drew back over there from that range, which is about here, and how it already got broken. Excuse me, let's get that out of the way right here. So this support that the market already broke, so notice how the 4-hour chart now shows me in a more clear way this candle successfully breaking this support. What does the textbook say? It says whenever the market breaks that support area, there's going to be a pullback, and then I have to make a continuation trade. So in other words, after the price finishes this range and drops here, bears are going to be waiting for the pullback to sell over here. Okay, so I'm going to draw this now with this little arrow. Boop. That is a sell opportunity for all the bears that are saying, oh, this is a big resistance. Remember the previous chart, there's a big resistance over here. We see this bearish engulfing candle. Oh, this is great. Here the support got broken. Oh my God, we're going down, blah, blah, blah. And then they're gonna wait for this pullback, and they're gonna get it. Believe me, they're gonna get it. They need to get it, because what's gonna happen is that first time failure, holding their trades, we know where their stop losses are. Remember that they don't teach you that around. And then what's going to happen is that when price is trying to break this support area, that's where bulls come in. Boom, they're going to drive price up. All these stop losses are going to be out, and that's where bulls are going to continue taking control. Momentum continues rising. Be careful though, because this second time failure situation can actually be lower than this low. So we could see a lower low from this low over here, and that would be the ultimate trap. Now, the way it's going to happen is not going to just boom explode up. There's going to be a retest of this area where all the bears got into the market, and then there's going to be that last little push to get that second time failure, and then that's where everything changes. So we got the range, we got that 1-time, 2-time failure here, and that's where we have to come in, us that we know better, understand market behavior, and anticipate that buying opportunity, and boom, that's where we're going to get that big awesome push. Okay, those are the two interesting and most effective ways we could trade this. There could also be a further push down over here, and if that's the case, remember this is a 4-hour chart. This will be it could take a while, and this would just be an even better buying price. Okay, so here we could take a few buying positions, and maybe hope that price breaks this resistance area over here, comes back and tests it, and then it goes up. Okay, so what I'm saying is this right now. Okay, so say bears take control for a little bit, and here's your ABC. Remember that always. Okay, remember we're within the Elliot wave analysis count theory, and we got the corrective wave that has to be made up of 3 subwaves A, B, C. This is your A, B, C, and then boom, we're gonna explode. Remember, ABC could be A, B, C, boom, explode. So always remember and don't lose count of your Elliot waves, because we know that this supposedly means this is the corrective wave. So we have to be looking for ABC patterns. Okay, so that's another. Don't forget about that. Is it possible that price just reverses and changes direction? Absolutely. We always have to have plan A, plan B. And if you guys see it, there could be an interesting head and shoulder pattern right now. So head, this is your right left shoulder, head, and a possible like right shoulder. Probably if this successfully breaks this support and it bounces here, that could mean there would be an awesome and interesting right shoulder somewhere over here, and then price continue breaking this neckline and so on and so forth. Is that the case though? I don't believe it is. Our bias is long. Remember our big picture. We cannot ignore the big picture. I talk about big pictures in other videos. I recently did an awesome live free trading webinar where I talk about understanding the big picture. Okay, so check that out. I think it's the video before this one. So understand the big picture. Understand that market is bullish. There's no reason why we need to get trapped into bearish momentum or bearish intentions of change in direction. Okay, so finishing up this analysis, we've already taken a few minutes, but I want to be as clear as possible so you guys can understand. Whenever we see that awesome market behavior within this support area, get those buys, stop loss right beneath this support area. You never know if it tests this support, lower support. So stops at about here, entries all within this area right now, and you could expect price to go into the 161% Fibonacci extension of this big impulse. So I'm going to show you what I mean. Going back out into the daily chart, and this is where you can see it better. That's not the chart where I show the extension level. This is it. There it is. Awesome. And actually I had it on the 4 hours, so great. Perfect. This is another way of seeing it. So we've got 1, 2, 3, 4. That's what we're waiting for. See, wait for corrective wave 4 to finish before entering with a long position. Buying zone. Look at that buying zone. After that, we are going to calculate the extension of this third wave. So if you don't know how to do that, you're going to grab your Fibonacci retracement and you're going to draw it from top to the bottom like so, and that's going to pull out your Fibonacci levels extensions up top. Okay, so this is your objective. It's going to be somewhere between the prices of 710 and 707-ish, around that. Okay, guys, I hope you enjoyed this video. I hope you learned something new. I hope that if you already knew something, you understand it better and you see it more clear, and you can already put it into practice. Notice how here there's a type of triangle breakout already. This is great. This is great. Okay. Anyway, guys, once again, follow me on Instagram. I try to post as much material as possible. Contact me, text me, write me, answer me, whatever. Ask me anything you want. Let's work together, guys. So